Hello, everyone, and welcome back to Southern Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. It greatly helps the channel. Little bit of housekeeping. So tomorrow until probably Monday, I won't post any content. I will be outside the country, and basically it's going to be impossible for me to do anything. And on Monday to Wednesday, I'll be traveling for business, and the following week I'll be traveling again. However, when I'm traveling for business the first week, I will record, but without the setup. So I'll be in a different country again. So I need to basically, uh, you know, record from a hotel, and bringing the mask, etc., is not so handy. So I hope you guys can forgive me for that. Then I only plan to travel again in late August. Okay, so July and August, pretty much I'll be here all the time. Now, I would like to address what's in everybody's mind, which is, uh, most of it, as I predicted on Monday, happened. So inflation came better than expected. Markets immediately shoot up because that means money printing is now more viable, and as well as cutting rates. By the way, for people who didn't pay attention, money supply is already quite positive again because the Treasury Department is spending a lot of money. So people typically look only at the interest rates, and they don't look at money supply, M2, which is really what matters the most. That's how you can have new all-time highs and um, while having interest rates high at the same time, right? This is something that all the investors didn't pay attention to. They thought that we were in a world that things could only go up with low interest rates, and that has been proven to be wrong. Now, so inflation came lower than expected. That was also my expectation. That was going to come better than expected. I said last week that the job report was a complete fugazi, it's completely fantasy, but it doesn't matter for the markets in the sense that the markets trade off that report. They don't trade off my opinion of the report. Today, Fed Powell Powell said that the report was overstated, which for a person in his position is another way of saying complete BS. And markets immediately shot up through the day, but then as Powell started talking, the markets kind of cooled off a little bit. Most of them are still positive, but we are off the highs that we were, particularly Bitcoin. I think Bitcoin went as high as 70,000 something, and it's all the way back to 67 or so. So still a green day, but less green than expected, and particularly because what I was expecting was either a rate cut or talking about rate cuts. We got the second one, talking about rate cuts, which is what the market wants to hear. Basically, everybody is against any new rate hikes, which is also what the market wants to hear. So it's a bit by order of priority, right? So first, inflation is lower than expected. Okay, good. Secondly, are they going to hike again? No. Good. Are they continue to tighten, meaning selling bonds? No. Okay, good. Are they going to cut rates? Yes. Good. Are they going to cut rates 10 times? Well, at the moment they say they're going to cut once. Okay, once is better than zero. So then you have a bit of a sell-off, which is to balance out the over expectation. I think when the numbers came out, I think they immediately got priced in a rate cut. And basically what we're doing now is, okay, we're going to get a rate cut, but not as soon as expected. And what the Fed is doing, and I've mentioned this many times before, the Fed actually wants to hold rates, if they can, as much as possible, because they want to get out of this money printing business, of this rate cutting business, because they know it's a no way out type of game. However, the Treasury doesn't help. So as long as the Treasury Department keeps on heading $2 to $3 trillion in budget deficits, plus $1 trillion in trade deficit, that's $4 trillion per year, the only way to accommodate that is with very low interest rates, and we're getting to the point where the only way to accommodate that will be negative interest rates. The reason why the ECB went to negative rates, for example, in the past 10 years, is because the southern European economies had debt to the GDP of 180, 160%. If you look at Japan, also had negative interest rates. Why? Because they had 250% debt to GDP. The US is at the moment, I think, 130 to 140, I don't know by heart. So which means that they're getting to the point where the negative rate is going to be the only way out. Which means it's terrible for the population, particularly for people who don't own assets, meaning young people. It's great for older people. They own the houses and own stocks and actually have money. So those people, they will do very well, as they've been doing before. Younger people, well, too bad for you guys. Now, I'm not celebrating this. I don't think this is good. It is what it is. And the key is I cannot change any of this. So there's nothing I can do. What I can try to do is position myself to be the biggest beneficial of the crap that they're doing. That's the only way that I have. And that's what I strive to do. You've seen a lot of the meme coins recovering as well. I don't think it makes much difference at the moment. The point was, okay, let's clear this hurdle. We got a bit scared with the job reports, which was, a fantasy, as I mentioned last Friday. But it was important for investors to see, okay, these job reports was actually a fantasy, and inflation is not exploding, and we can actually eventually have the interest rate cuts as we wanted. Now, it still leaves us with the overall debt problem. And on this, I see three solutions. I see three types of people in the government. And by the way, you should count the Fed as government because they act as part of the government. So that's all that matters. I know they're supposed to be independent. Yeah, right. If you believe in Santa Claus, it's up to you. I think you have people who are actually clueless and they think that you can just, get into debt, print money, get into debt, print money, and there's no consequences. Just things which happen as coincidence. I would say I wouldn't be surprised if that was about like 50% of the people involved in this, okay? Because this seems to have worked for so long that actually I think these people are actually convinced that what they're doing has no consequences. Then you have, I think, probably around 30 to 40% of people who know that something is wrong, but they don't care as long as it happens under someone else's watch. Meaning, I want to stay here in power for all this time period. I know what you are doing here is not great. But if this explodes by the time that guy is in office and not me, I'm fine with it. Because then people will even remember, in the times of this guy, things were really good and now they're really bad. You see, so you have the people that know that something is wrong and they don't care, as long as it doesn't affect their re-election. That's it. And then you have people who are actually concerned and people who understand that this is wrong, but they are placing their bets, in my view, in the explosion of AI and productivity. Meaning GDP can grow at such a pace with widespread implementation of AI that all these mistakes and all this debt accumulation can be corrected with explosions in GDP. I hope so. I hope that that's the case. I have really a lot of trust in AI and I have a lot of faith in it. However, I still feel that the government will find a way, even if AI solves all our current problems. I get the feeling that they will find a way to create additional problems on top that will have a bad effect on us again. But no, maybe the human potential will ramp ahead of these people. Who knows? We'll be here to watch. I think most people say, maybe you're being too optimistic. I'm not being optimistic. It is based on what a lot of very intelligent people, who are actually billionaires, by the way, they don't need the money anymore, are actually saying about the innovations of AI and the productivity improvements that it can bring. We'll see. We are here to wait and see and to evaluate that. Now, I wanted to bring something to people's attention. So, last crypto cycle, from top to bottom, it was 385 days. Before that, 385 days. This crypto cycle from top to bottom was 380 days. Now, in the past two cycles, that is 2017 and 2021, the top of each cycle came exactly 546 days after the halving, the exact top. Now, that is top for the majority of the coins, but particularly Bitcoin. But a lot of coins, by the way, in the previous cycle, they peaked in April 2021 and they never came back for the second bubble. Okay, they came very close, but they never came back. But the reality is, last cycle, 546 days, the previous cycle, 546 days. That would put us in October 2025. Will history repeat again? Will we go for the final hoorah until October 2025? Or will it end much sooner? I don't know. I think it's too soon to tell. It's just funny that 2017 was 546 days, 2021, 546 days. I mean, it's remarkable. And then the bear market was 365, 365, 360. So we'll see. We'll see. I think it's quite interesting. I think it's something to keep in mind. I think that all this sideways movement, extremely boring, people getting depressed kind of stuff, is exactly what we need. I am seeing now, and I've never seen this before, I've never seen such bearish sentiment with such high prices. It's quite funny. People forget, Ethereum should be around 2,700. Bitcoin should be around 40, 45,000 if you take the previous cycle. So we are way ahead of schedule in terms of price, not in terms of movement. The movement is fairly in line. And the thing that surprises me is the halving happened in April. Typically, it takes 2 to 3 weeks for the sideways movement from the halving to be taken out, particularly closer to 2 months, to be honest. That took place, I think, in 19 June, which is next week, which is actually in a week from now. How funny would it be that we started pumping quite aggressively next week? Because that would put us in the 2-month period after the halving, just like prior cycles, where we just, typically what happens during the halving is we have a big move up, which we had to 74,000. Then we have the sell-off. I thought we were going to go to 47, 52K. Okay, we stopped at 56. Not bad. I mean, people were saying when we were at 74, we're going to go to 100K immediately. I said, no, we're going to go to the 50s. I thought 52K. Okay, fine, 56K. So I was wrong for those little 4K. That's fine. And then it's sideways movement into the next leg up. And that whole stuff usually takes 2 to 3 months. You had cycles that lasted 3 months. But if you look at the average, it's around 2 months. 2 months and a week, something like that. So how funny would it be if we start pumping after next week? So after the 19th of June and ahead. It'll be quite interesting. Something to keep an eye on. I'll try to keep an eye on it and maybe discuss it when we get to 19 June. But in any case, something for you guys to keep in mind. Now, this doesn't mean that the cycles predict or happen exactly to the T. But it's important to understand why these things develop the way they do. So you need people to be bearish, and you need people to start doubting, and you need people, like I've seen already, saying that the bull market is over. You need this, because the only way for us to go up is for these people to sell, new buyers come in, and then these guys who sold here can come in at a later higher price. This is what you need. If these people were super convinced and you had new people coming in super convinced, then you have a very short cycle, because everybody that wants to buy, they are already here. So when the buyers are here, they can only do one thing: sell. We know retail is not here. How do we know retail is not here? Because the Coinbase app is number 300 in the ranking of downloads. When it's top 10, consider the time is here. Is the Ethereum ETF here? No. Are there other ETFs coming? No. Is there any other country doing the El Salvador style and announcing as reserve currency Bitcoin? No. Are we seeing celebrities demanding to be paid in Bitcoin? No. Are we seeing EuroCup. The EuroCup in Europe is now about to start. Do we see only advertising about crypto? No. So we are very far away. That's my point. There are a lot of things that makes me believe that we are very far away, and people don't get this concept. They think bull market, they think green candles every day. Green. No, that's not the bull market. That's the euphoria phase of the bull market. That lasts 20% of the time. The remaining of the time, you have corrections of 60%, 70%, 50%, not in Bitcoin. Bitcoin, you can have corrections up to 40%. But the other ones, you have corrections of 60, 70, 75, even 80 in some cases, 65, and more than one. So if you get completely stressed out because crypto is down, 30%, you're going to struggle. I mean, there's no other way I can say this to you. I don't want to lie to you. You are going to struggle. I've said this before, I'll say it again. Crypto is the best asset class in the history of mankind, and the price you pay for it is called volatility. Most people can't handle it. So they lose. And they buy when they should sell, and they sell when they should buy. That's it. They reveal their most deep psychological patterns, but because crypto is so volatile, they become very in your face. See what I mean? And with that, guys, I'll leave you be. Thank you very much for your support. If you do enjoy the content, please drop the like and subscribe, and I'll catch you in the next one.